What's up, YouTube? Herman Williams back with you again with another money lesson that will hopefully help you on your path to financial freedom. Today I want to talk more about building wealth and how you can start making money moves that will help you build wealth. We all see and hear about wealthy people and the lavish lifestyles they live, but we rarely hear any details about how they got wealthy or how they maintain their wealth. Well, today I'm going to give you my top 5 assets for building wealth, and I'm also going to tell you how you can start acquiring these assets and begin building wealth for yourself. Before we get started, I just want to welcome you if you're new to this channel. If you are new and enjoy the content, please take a moment and subscribe by clicking on the link in the lower right hand corner at any time. Don't forget to also smash that notification bell so that you will be informed when a new video lesson is released. Don't worry, you're not going to get any emails, only a notification when a new video is published. Now, on to today's lesson. Let me start out by asking you a question. What images come to mind when you think of someone who is considered wealthy? Do you see luxurious mansions and fancy cars? What about private jets and yachts as long as a football field? While all these things may be stereotypical examples of wealth, they may not be what wealth means to you. Being rich or wealthy is defined by each individual and not by society, at least in my opinion. Having wealth or being wealthy to you may simply mean having the resources to live the kind of lifestyle that you desire. And the lifestyle that you desire could be quite different from the one we see portrayed on TV. However, the methods you use and the type of assets you need to acquire are the same as those of the people with the yachts and the mansions and the private jets. You just may not need to acquire as much to live a lifestyle that makes you happy. Regardless of how you define wealth, you will likely not acquire wealth by simply working hard, regardless of how good your job is. You see, acquiring wealth is not about how much money you make, it's about how much you keep. The ultra rich and wealthy understand that the way you get to keep more is by acquiring assets that produce money for you. They also understand that assets put money in your pocket and liabilities take money out of your pocket. Those who become rich and stay rich understand that you need to manage both in order to build wealth. So what are my top 5 assets for building wealth, and how can you begin acquiring them for yourself? Before I give you my top 5, let me just say that these are not necessarily in the order that you need to acquire each one. That depends on where you currently stand and a number of other factors that can influence the order in which you go after these assets. Number 1 on my list of the top 5 assets for building wealth is stocks. I know a lot of you are still reluctant about investing in the stock market. You either feel like it's too risky or you feel like you don't have enough money to invest in the stock market. Well, let me go ahead and bust both of those myths right now. First of all, I'm not going to sit here and tell you that there's not risk in investing in the stock market. The stock market has always had ups and downs, therefore there's always been risk. But if you look at the historical average return of the stock market, you will see that over the last 100 years, the stock market has had an average return of almost 10%. Where else can you earn that kind of return on your money? Being invested in the stock market can grow your money in a couple of different ways. First of all, your money grows as the value of your investment goes up. If you purchase a stock, mutual fund, or ETF for $10 a share, and over time that asset increased in value to $20 per share, that would be a 100% return on your investment. But that same asset only has to increase to $11 per share to give you a 10% return. The reality is there will be times when it may go up to $15 a share or higher, and there may be times when it may drop to $5 a share or lower. But historically, over any 20-year period, your investment should average around 10% return if you're well diversified in the stock market. The second way that being invested in the stock market can make your money grow is through dividends. Some companies distribute a portion of their profits to their shareholders in the form of dividends. You usually have the choice to either receive your dividend in the form of a quarterly payment to you or you can have your dividend reinvested, meaning you use it to buy more stock. The more shares you have, the higher your dividend payment. It's usually best to have your dividends reinvested during your working years so that you can accumulate as many shares as possible. That way, in later years, you may be able to receive your dividend payment while still maintaining the total number of shares. For those of you who don't think you have enough money to invest in the stock market, it only takes $50 to open an investment account with Fidelity. In fact, you can actually open the account with $0, and Fidelity will give you 60 days to fund the account with at least $50 before they will close it. Now, once you open the account, you'll have access to a suite of tools that can help you decide how to invest, and you can also choose from a range of free to paid advisor services. There are also other companies other than Fidelity that offer similar services. My point is, you don't need a lot of money to get started. So if your employer doesn't offer a retirement plan, don't think that you don't have other choices for investing. Now that you know, what's keeping you from getting started? Number 2 on my top 5 list of assets that build wealth is bonds. Bonds are different from stocks in a couple of important ways. When you purchase stocks, you're actually purchasing a piece of the company, and therefore you are a part owner in that company. Bonds, on the other hand, are a loan that you make to a company or government. When the stock price of a company goes down, so does the value of your stake in that company if you own stock. However, if you own bonds from that same company, that is a debt obligation that they still have to pay unless the company goes bankrupt. Most bonds pay what is known as a coupon rate, which is somewhat similar to dividends paid on some stocks. The difference is that the coupon rate is actually the interest that is being paid on the loan that you made to the company or government. Just like you pay interest on a loan that you take out at a bank, except in this case, you are the bank. The coupon rate is usually paid every 6 months, but it can be paid quarterly or annually. At the end of the term, the face value of the bond is paid in a lump sum. Bonds are usually sold in $1,000 increments. So if you purchased a $1,000 bond that has a coupon rate of 8% and a maturity of 5 years, that would mean that every 6 months you would receive $40 or $80 annually, which would equal $400 over the 5-year period. And then at the end of the 5 years, you would receive the $1,000 face value for a total of $1,400. It's important to note, though, that sometimes bonds sell at a premium, meaning you would pay slightly more than $1,000 for a $1,000 bond. But sometimes bonds sell at a discount, meaning you would pay less than $1,000 for a bond that still has a face value of $1,000. Again, don't think that you have to have a lot of money to invest in bonds. You can buy into bonds by purchasing shares of a bond fund through the same account that I mentioned earlier that you could start with only $50. Number 3 on my list of wealth building assets is real estate. People will always need a place to live, and there will always be people who need a place to conduct business. That's why residential and commercial real estate are a good investment. In a recent video, I talked about why I love real estate investing. And at the time of that video, I was working on a deal to sell a property that had been providing me with passive income through rent payments for over 15 years. The rent payments covered the mortgage payments, the taxes and insurance, and provided additional cash flow for me. During the time that I held the property, it also increased in value. I recently closed on that property and walked away with net proceeds from the sale in excess of $100,000. That doesn't even include the positive cash flow that I received over the years or the tax breaks I received from owning rental property. There are many ways to get started in real estate, and many people struggle with coming up with the down payment to buy their first property. I was able to use a cash out refinance of my primary residence to fund my first property, But there are many other options, including using other investors. But if you still can't come up with the down payment, or if you don't want to be a landlord, you can also invest in real estate by using number 4 on my list of top 5 assets for building wealth. You can get into real estate by using what are known as REITs, R-E-I-T-S. REITs are real estate investment trusts. Basically, a REIT is a company that owns and operates various income-producing real estate properties. And the properties could be apartment buildings, office buildings, or even manufacturing facilities. REITs are required to pay 90% of their income to their shareholders in the form of dividends. The dividends from some REITs can be very lucrative and can make a good addition to your wealth building portfolio. And just like the previous example, publicly traded REITs can be purchased through your investment accounts. Just be sure to do your due diligence before purchasing a REIT. Some can have required holding periods and some can carry additional fees. Still, this can be a good way to invest in real estate without actually purchasing the properties yourself. Number 5 on my list is owning a business. Being a business owner offers several wealth building opportunities. Obviously, there's the revenue that can be generated from a successful business. That revenue can be used to expand and grow the business, or it can be used to fund other business ventures, or it can be used to fund other investments or to finance your current or future lifestyle. Owning a business can also provide you with some very lucrative tax breaks as well. Anytime you can save money on taxes, it creates an opportunity to build wealth. Any money that doesn't have to be paid in taxes can be used to help fund one or more of these wealth building strategies. Just remember, when it comes to taxes, tax avoidance is perfectly legal. Tax evasion, on the other hand, is not. Find something that you're good at or have a passion for and figure out how to turn that into a business. If you're going to invest in real estate by buying and selling or buying and renting properties yourself, why not form a legal business entity and get into real estate as a business owner? Watch my video on why you should be an entrepreneur for more details on why you should be a business owner. If you want to start building wealth, you have to take action to start acquiring the kind of assets that will build wealth for you. Like I said at the beginning, you're never going to build any real wealth by simply working hard. You also need to understand that our ability to build wealth is mostly based on the methods that we use or don't use to manage our money, no matter how much or how little we have. And our methods are simply the actions we take based on the behaviors that we have learned. And like I always say, if you change your behaviors, you can change your life. So until next time, behave well.